Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad chatting with Matt Badiali, editor of the New Energy newsletter, which is published under Mangrove Investor. We will post a link so you can find out more information on Matt's New Energy newsletter. Now, Matt, we've had you on the show once before. You and I just reconnected at the New Orleans Investment Conference at the tail end of last year. Your newsletter focused on critical minerals. Now, there's clearly a lot more interest in this sector of minerals. These aren't new in any means, but they've come more into the limelight a lot thanks to governments being much more supportive of companies and of these general minerals, as well as more companies, more technology companies that are also looking to secure some sort of supply here. Now, one of the problems that I have with this whole critical minerals narrative is that it seems like a lot of companies are trying to grasp on and say, look, our company is going to be the next one that could get free money from the government. We're in critical minerals. We've seen a lot of companies shift over to some of these critical minerals. But Matt, you're inside this sector. So can you filter down this much wider world now of critical minerals into a few that you think present the best long-term investment opportunities, please?
Yes, I can. And thank you, Corey and Chad, for having me on again. I appreciate it. Yeah, I mean, the popularity of critical minerals has a lot to do with marketing. We saw this in the past when the rare earth elements got big. A lot of companies shifted over and renamed themselves electric metals or rare earth metals. And if a company's pitch is 90% about the potential of these commodities and 10% is the potential for free money from the government, you should run away. Because no matter what commodity it is, it still comes down to the quality of the asset. I really narrow my focus down to three main commodities here. And that's not to say you can't make money in all of them, but it really gets a lot more difficult when you get into these smaller, more boutique metals that have to be refined in China, that sort of thing. So I really look at nickel because the market is large and it's getting more and more difficult to find it. I look at lithium, although lithium is a salt. It's very easy to find brines. It's just that they're challenged in certain jurisdictions. And then I'm really focused on copper. To me, copper sits at the top of the list. When you look at the 20 largest copper mines in the world, the ones that produce most of the copper that we consume right now, the average age of those mines about 64 years. You look at a mine like El Teniente, which is, I think, top 10 producers in the world. It's been producing copper for 200 years. Chuquicamata, over 100 years. Morenci in the U.S., 150 years. Buena Vista del Cobre, 124 years. These things are long in the tooth. And the older they get, the lower the grade. And that's a problem when you look at the kind of the demand across the board for copper. So those are my three big ones.
Well, Matt, another takeaway that I had in reading your piece at the Mangrove Investor regularly is when you went to PDAC, you put out a little missive afterwards, which caught my attention. And it was that initially when you would go to the Prospectors and Developers Association of Canada conference, it was almost all gold or silver companies. And now there are a lot of these critical minerals companies there. Did you notice a change in investor interest as far as at the booths or just talking to these companies? And is it that there's not just about the desire to make money, but also desire to do good in the world?
Well, it blew me away. The number of these booths was insane. So that right out of the gate. I mean, as I said in that piece, I'm used to going and seeing, you walk down the road, it'd be gold, 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 silver, gold, 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 silver, copper, gold, 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 right? And this time it was battery metals, rare earths, lithium. It was a much more diverse group in terms of what commodities they were looking for. And yeah, I was across from the Ivanhoe booth for a lot of the show. And the Ivanhoe, for those of you who don't know, holds some phenomenal projects in Africa. I mean, their Kamoa project is spectacular. Their Kipushi project is spectacular. Massive new copper deposits there, nickel and platinum groups, and they were getting a lot of attention. Like they had a film crew come by and interview the CEO while I was there. But among the smaller companies, there just wasn't that much interest. To be fair, there weren't that many investors at this show. But I do know I spoke with a group of investors that represent family offices and funds in Europe, and they were interested in copper and battery metals specifically. So they were at PDAC looking for good projects. But the problem was, as I said earlier, that a lot of this is marketing. And it's still very, very hard to find these projects that kind of clear the hurdles of, is it a good project in a good jurisdiction with the potential to become a mine?
Yeah, that's so true. But it's so early on, right? And we've seen such a shift of even some gold, silver companies moving into critical minerals. And
Yeah.
in all fairness, their share price getting a bounce off the back of it. That, of course, doesn't mean that the projects work, but it does show at least some of the interest of, I think, newer investors in the space. Let's dive into some of these minerals that you mentioned. Let's start with copper, because boy, oh boy, I'm getting a lot of news. I'm hearing from a lot of people about the supply demand imbalance, how quite frankly the world might run out of copper in the relatively near term. I do usually shy away, or I get a bit scared when I hear these type of comments. But Matt, just start us off there. What's your thought on some of this data that's coming out that the world is quite simply running low on copper?
Well, we're not going to run out because obviously it's priced. It's a commodity that is priced so that you won't run out of it. It'll just get so expensive that people will stop using it. The thing about copper, and the reason that you're seeing all this hair on fire, oh my gosh stuff in the press, is it's really, really difficult and in some cases impossible to substitute for copper. When you look at the old platinum palladium in car exhausts, there was a time when platinum was over $1,000 an ounce and palladium was under $500 an ounce, and so it was pretty easy to substitute because palladium has very comparable reactive properties. So I was like, oh, we can use this and it's cheap. But when you're making an electric motor, like in electric vehicles, you can't substitute for copper. Like aluminum will conduct electricity, but when you want to build an electric motor, the volume of aluminum that you would need just makes the motor too big and it doesn't work. So the math says in the long term is relative, right? 3 years, in the next 3 to 5 years, we're really going to be in trouble in terms of copper supply, which means that the price is going to have to come up. One of my favorite quotes about this is from a guy named John LaForge. He's the head of real asset strategy at Wells Fargo. And in a recent, I think it was a Bloomberg article, he said, we're going to look back at 2022 and say, oops, because the market is reflecting immediate concerns. But if you really thought about the future, you can see the world is clearly changing. It's going to be electrified and it's going to need a lot of copper. And I just love that idea that, in 3 years, we're going to look back and go, oh, that was our window, man. 2022, 2023, we should have been buying this stuff because the math is there. The demand is there. When you look at how quickly electric vehicles are penetrating the market and how much more copper each one of those consumes, that's marginal increase in copper demand, and it's massive. So that's kind of how I see copper right now.
Well, Matt, when you dive down into the copper companies, there are producing companies. Some of them are getting a little long in the tooth with older mines. There's development stage companies, and they're kind of a couple buckets. There's these big mega cap development projects that take billions to get going and often 5 to 10 years. But there's also underground high grade copper deposits. Maybe we see those more in Canada, sometimes the US. There's people trying to do in situ copper. Do you have any thoughts as to how you like to invest in these copper companies? Because a lot of them are really long lead times to get the projects into production.
Yeah, I absolutely agree. That in the letter, I've been very careful about what I recommend because it's still very hard to get permitted. And so when you see a project like Pebble, which in 2006 or 2007, Anglo dropped $1 billion to own half of that. It's a massive copper and moly deposit. And fast forward to, I forget when it didn't get permitted, 2014, 2015, and it didn't get permitted. And then some folks tried to resurrect it. It still couldn't get permitted. It's very clear to me that unless you have a project that is really situated in the right place and management is really sensitive to the issues that it takes to get permitted, that is a huge risk for investors. So in new energy, we recommended Capstone, which is one of those giant deposits being developed. It's going to take a lot of money to build. But even back as far as August, you could buy that thing for under $3 a share. Now it's sitting at almost $6 a share, but it actually got up pretty high there for a while. That's one I like. I'm very careful in my approach to development projects, because you have to be able to do the financial analysis on these things, because you're going from that blue sky, hey, we made a discovery and everybody's excited and it's easy to market, to now we're producing stuff. So we're basically becoming a t-shirt factory, and if the cost of your t-shirt is $15 and you can only sell them for $10, we as investors get skinned. And we've seen that happen. I mean, we certainly have seen in the gold space over the years where an asset underperformed or an acquisition dramatically underperformed. Kinross. But, that's why I take a hard look at a lot of these projects, and I do my own financial analysis on them, because I want to make sure that when they go into production, they are going to be they're going to be economic at today's prices, or even a little lower than today's prices. And that way, if we do get the tailwind of rising copper prices, that's a benefit. Like, I don't want to buy an asset that needs copper to go up 50% before it's economic, because that's a great way to lose a lot of money.
So, Matt, the one difference I see, at least right now, with copper compared to some of these other critical minerals is that copper is a bigger market. It does have a lot of these assets that seem to just be sitting there waiting to go into production. But we haven't seen governments focus as much on copper. They haven't been handing out free money, or even really setting aside these pools of money and saying, we're going to give it to copper companies. At least that's just from what I've been reading. Do you think that is what's also holding back some of these copper companies? Is that, look, there are a lot of defined assets out there, but governments and other, let's say, battery companies, or even something like Tesla, they haven't made deals with copper companies yet.
Yeah, part of it is because copper is such a big market. But we have seen, like, for example, in the States, they passed that legislation last year where if you want to get the full break on an electric vehicle or on solar or wind, you have to source your metals. I think it's with a U.S. trading partner. So Mexico, Canada, that sort of thing. And that does apply to copper. But yeah, they're not giving free money to copper projects. And so I think that we'll go back to the macro picture. People right now associate copper with economics, and everyone is concerned about inflation and the banks, and it's all this short-term, near-term, and risk-off thinking. And so when they think about copper, they're not doing the math. Where something like battery metals, like lithium, everybody associates lithium with car batteries and this transition to an electrified economy, when in fact you use more copper in a lithium battery than you do lithium. But it's just, I think it's the context. Lithium prior to the kind of the rise of electric vehicles was kind of an afterthought. It was like, well, yeah, it's grease or it's paint. And now all of a sudden it's really important to batteries, the rechargeable batteries.
Well, Matt, since you brought up lithium, and it is important to batteries and the battery metals theme, and people do associate it directly with the batteries themselves, although there they're always trying to figure out a way to get to work around that and come up with a different battery. We hear endlessly about all these different batteries being tested. But in the lithium sector, really over the last couple of years, it's become a little crowded. There is a lot of Me Too companies jumping on and saying, hey, we were a gold company, but look at this. We've got pegmatites. Doesn't matter if they have spodumene or lithium in them. We've got pegmatites. And a lot of investors are making a mad dash into this sector without really understanding the brines versus the hard rock versus the direct lithium extraction. How do you separate the wheat from the chaff?
I point to SQM. They're the single largest producer, I believe, of lithium there in the Western Hemisphere. These guys have a giant brine basin, and they had a news release out. It's been a couple of years now where they're like, yeah, we have to double lithium production because demand is so high, so we're going to drill like 2 more wells. And that was one of those, oh, holy cow. Like that's all it takes, because lithium, when you understand how the brines work, I mean, it's these guys were producing brine for potash for agriculture, and the lithium was kind of a byproduct for years. So it's a much simpler, the initial economics are the wells that you have to drill to pull up the brine, but it's really a low ongoing capital business, where hard rock mining is hard rock mining, man. And the amount of lithium that you pull out of this hard rock the value of that has to offset all the other input costs, the concrete to shore up the mine, the diesel that you use to truck the rocks. It's a relatively, well, it's a much more expensive proposition than mining these brines. So it all comes down to economics, and like I said, that's always where I come down to. You got to look at the current price of lithium, the current lithium contract prices, and these hard rock mines have to come in under that threshold, or I really have no interest in a mine that isn't economic until lithium prices get up to X. We've seen that, in a lot of these places. But the thing is, they can still raise money and they can still get investors' interest because they can go and tell the lithium story. And the lithium story that appeals to investors, especially novice investors and retail investors right now, is look at how fast electric cars are climbing in popularity. China has mandated that like 10% or 15% of its automobiles sold next year will be battery operated, electric vehicles. And so we just don't have enough lithium to meet that. Therefore, you need to buy my hard rock lithium, my pegmatite lithium project. That's apples are going up in price. You need to buy my oranges. You know what I mean? That's not the same. So I think retail investors have to be very careful about the economics of these projects.
Fair enough. Let's also talk about nickel then, because nickel has been a mineral that, has gotten more attention. There's even a company that we've had on the show recently, FPX, that was just essentially given money by the government of Canada for more development, more economic studies, I believe, on their asset. That's early on, but it does show that there's a whole different funding avenue for some of these companies. How does nickel fit into the overall critical minerals story for you?
Well, I think that's brilliant, by the way. I really think that nickel's a tough one because there's a lot of nickel out there. There's something called nickel laterites, and that's basically these primary nickel deposits, whether they basically rust, and they form these layers. And this is particularly in the tropics. But we know the nickel's there. It's very hard and very expensive to get it out. Not unlike aluminum, but just harder and more expensive. So nickel is going to play a much larger role. I'd like to see, I'm always in favor of seeing companies empowered in some way, whether it's making permitting easier or getting direct investment by the government to look for this stuff. I'm a fan of that. I think that I think nickel, like copper, is going to be one of those minerals that is a limiting factor in going forward in terms of the growth of batteries as we sit right now. Now, that's like Shad said, we're still waiting for that. We're waiting for that breakthrough in battery technology. But it hasn't come yet. We were talking before we started recording about Millrock Resources. They've been around forever and ever, and they finally decided to go in. They've changed their name now to Alaska Energy Metals, and they're going to work on this giant nickel project. And I think it's the right thing for them to do. I mean, the CEO of Millrock has a long history. I mean, he was up looking at this project, this nickel project, in the 90s for Inco before he started his own company. I think this is the right thing for them. And I'm not sure in the past that they would have done this, right? Because the focus was gold or silver or other precious metals. It really wasn't base metals. I don't think I can name more than 2 or 3 juniors that were looking for nickel prior to the last 2 years.
Well, Matt, that brings up an interesting point with nickel, because when we talk to other investors about the nickel space, many are very positive on the macro side of the nickel component. But when you drill down into the mining stocks, you make a great point. There's not nearly as many nickel stocks as there are, let's say, copper or gold or silver stocks, or even lithium stocks for that matter. But when you look at nickel, it's also a polymetallic deposit typically. There's a lot of companies that have nickel and platinum and palladium, or nickel and copper, or nickel and cobalt. It's always a mixed bag. It makes it more hard for investors to really value, especially retail investors, to value how do these projects work? What is a attractive drill hole? What is an economic deposit? How do you navigate those waters with nickel?
Yeah, it's difficult. And that's something I'm going to have to get my head around going forward, because there are a couple places where we can be tripped up. And part of it is we have to rely on the companies to be telling us the truth. So when it comes to valuation of these projects, knowing the management team matters, because with these polymetallic deposits, when they're shipping that ore, if they're shipping that ore to a smelter, some of the material kind of gets lost. So even though it's some percent of these minor metals that are worth a lot of money, they may not get a lot of credit from the smelter, because the smelter takes that as part of the agreement to smelt your metal. So yeah, those polymetallics get very complicated in terms of their economics. It just speaks to the value of finding a quality nickel asset, and one that's run by good people and following them along. I mean, Millrock, or what's called Alaska Energy Metals Corporation, they're micro cap, with this giant nickel project. And that's what I'm going to follow along, because if they are able to prove this thing up, it's going to be a serious, like a step change in their market value. Because, I mean, this is one of those opportunities where it's low risk with potentially massive reward if they can make it work. But yeah, I honestly need to do more work in this space. Nickel's very interesting to me, and outside of some of the historically large producers that have been around for a long time, I'm not aware of too many really high quality nickel projects out there right now.
All right, Matt. Hey, that says a lot, but you know what? There is some more interest in that sector, and then some of these companies have been around for a while, but it's a much, much smaller world. Matt, very cool conversation. Really appreciate, first of all, you taking time with us to share some of your thoughts on the critical minerals. And also, I read over the New Energy newsletter that you publish. We're going to post a link to that. I recommend everybody checking out what Matt has to write. And I've even told Matt to send us some more articles, and we will post those on our site. So please give Matt's New Energy newsletter a look. Let us know if you want us to focus on any companies or any of the individual critical minerals for our future calls, and we'll happily do that. Matt, thank you very much for your time, man. We'll chat again soon.
Thanks for having me. I really appreciate it, guys.